Hello, and welcome to the Mortgage Porter Weekly. I'm Rhonda Porter, a mortgage advisor here in the greater Seattle area with your update for the week of July 20th, 2026. Let's start with some good news. June brought welcome relief on inflation, with consumer prices falling 0.4% for the month and annual inflation slowing to 3.5%. That matters because the Fed watches inflation closely alongside the labor market and developments in the Middle East as it weighs its next move coming up later this month. Housing was a mixed bag. Pending home sales dropped 5.4% from May to June, breaking a 4-month streak of gains. A reminder that buyers remain sensitive to rates and affordability. Housing starts, though, bounced back in a big way, up 19%, and that was for June, even as building permits dipped slightly and builders stay cautious. Retail sales rose 0.2% in June, or a stronger 0.7% if you exclude gas stations. So consumers are still spending a bit. And oil prices continue to move higher as tensions between the U.S. and Iran escalated, which is a trend we'll be continuing to watch. Now let's talk mortgage rates. According to the Optimal Blue Index, the average 30-year fixed rate as of last Friday, June 17th, was 6.537%. This is a touch higher than what I showed with you the previous week. And a quick reminder that this rate reflects roughly 35% of mortgage transactions nationwide from lenders who use Optimal Blue when they go in to lock an interest rate. And so this is not a rate quote. You can't lock in rates from last Friday. I wish we could today. But your credit score, loan to value, and other factors will play a role in what you actually qualify for. And we don't know if these rates are priced with a point or no points. So if you'd like to have a detailed rate scenario based on what your personal scenario is, please reach out to me. I'm happy to provide that for you. It's a light week on the economic calendar, so rates are likely to take their cue from what's happening in Iran rather than data releases. And right now, CME's FedWatch tool has the odds at just under 17% for a rate hike at the Fed's next meeting on July 28th and 29th. And checking in on mortgage-backed securities, it's just before noon Pacific time as I record this, and mortgage-backed securities are down 19 basis points today. I've actually received a rate lock alert this morning, so if you're floating, that's worth having a conversation with your lender about. This week, I want to highlight a program that's a great fit for a lot of the clients that I work with, and it's sometimes called an asset qualifier, asset depletion, or asset utilization loans. They're all kind of related. But here's the idea. Not everyone's income shows up neatly on a tax return or W-2. And I regularly work with retirees living off their investment portfolios, high net worth clients whose wealth sits in brokerage accounts, and self-employed borrowers whose tax returns are optimized for deductions rather than qualifying income for a mortgage. So with this program, instead of documenting income the traditional way, we document what you have as far as your liquid assets are and convert that into a qualifying income figure. So no tax returns or income documents or traditional income documents are required for this program. A detail that often surprises people is that you don't have to actually be withdrawing from these accounts. The math is based on your asset balance, not your cash flow. So your accounts can stay fully invested and untouched. Compared to the asset as income options for a conventional loan, which divides your assets over 360 months, these non-QM programs typically use a much shorter divisors, like 84 months, which means significantly more qualifying power for the same pool of assets. If you have complicated income or you're asset rich, but your tax returns don't tell the full story, this could be an easy button for you. So you can learn more at mortgageporter.com under our specialty mortgage programs, or reach out to me for more information. I hope you have a great week. If you or anyone that you know is considering buying or refinancing a home located anywhere in Washington State, I'm happy to talk with you, even if it's months away. You can't get started too soon. So take care, and I hope to hear from you soon. See you next week.